Nigeria recorded Africa's largest trade surplus in the first half of 2025 with a positive balance of about $8.4 billion. And while the figures place the country ahead of Ghana and South Africa, the achievement has raised more questions than answers. Despite exporting more than it imports, Nigeria's currency remains flat, foreign investment is tepid, and its trade volumes trail behind peers. Now, the paradox highlights a critical question. Is this surplus truly a sign of economic strength or simply a statistical illusion? Muktar Mohammed, CEO, Finance with Muktar, joins me to discuss this. Thank you so much, Muktar, for joining us.
Thank you for having me, Lekon.
You're welcome. So Nigeria's surplus looks good on paper, but since oil still makes up most of our exports, how long can this really last?
I think, Lekon, you just basically hit the nail on the head. We are seeing surplus in terms of export, and you are seeing that we are not importing so much. And you have to ask yourself, what we're really importing so much into the country? It was oil and refined petroleum products. So what we have seen in this surplus was an advance of Dangote refinery now coming into stream. So we are not importing so much refined petroleum product like we used to import 100% before. So those trade surplus are not from non-oil sector, just like export also are not normal non-oil sector. Yes, in terms of they could tell you that, oh, the data that we got in non-oil sector have exported more in terms of percentage, but in terms of value, you realize that the oil sector is still the large driver. But when you look at our trade surplus, I think it's largely driven because we no more import those refined petroleum products like we used to import before.
Okay, so now, why has the Nigeria surplus boosted the Naira the way Ghana's trade numbers lifted the cedi, whether or not it's non-oil or oil exports?
You have to look at demand and supply. Where was our reserve at that time? What we have now can barely take us for 6 months of export. So in as much as we compare ourselves with Ghana and other African countries, we should also look at where we were and where we are today. We made a reserve that was on less than 25 billion and now doing 41 billion. So, and again, that means that an increment because of what we have seen. You also shouldn't forget that we have those challenges in terms of our major source of export, which is crude oil. We are still battling with oil theft, so we have not been able to resolve that. Just during the week, there was a report that says that our OPEC output, we're not even able to make it. So all these are challenges. Yes, but you cannot say that does not have impact on our exchange rate, Lekon, because when you look at our exchange rate, we've seen an improvement from 1,700, 1,600 to today. Some of our exchange is about 1,495 and approximately 1,500 official exchanges. So definitely, I think we can't say that these numbers have not impacted on our effects when you know where we are coming from. And the downward trend is still there. We see the Naira keep gaining by the day over the dollar, but people could attribute that to the weaker dollar. But whatever you attribute, whether the weaker dollar or it has just contributed to the stability of our currency.
Also, does this mean that foreign investors would be injecting more into the system, or they might still be holding back?
Why foreign investors hadn't come before now was because of volatility, whereby you see today exchange rate is here, tomorrow. So now they will expect that the foreign investors will be coming to Nigeria, especially with this, with what we've been able to achieve now in terms of stability in the exchange rate. The challenge they had was not that they don't want to come, but you come in at 1,700, you don't know what you are exiting at. But now we can say the highest exit you can get to is about 1,500, and so it's still giving them more time to giving an allowance that they were able to make profit for whatever investment that they are doing. But again, what we are attracting now thus far since President Tinubu came to power is foreign portfolio investors. We have not attract foreign direct investors who in terms are the ones that really build the economy, then create jobs. But like I always say, before you get the foreign portfolio investors, foreign direct investors, you always have to attract more of the foreign portfolio investors. Sometimes the foreign portfolio investors are the ones that become the foreign direct investors. So the foreign direct investors were still struggling there. But again, foreign portfolio investors are coming in trickles because we now have a stable exchange rate. And again, we have a reform One game changer that might happen is if we here we don't cut rate and we expect a rate cut from the United States, so we might be attracting more investors into our market because of the kind of return. Don't forget that most of our sovereign wealth, our sovereign bonds have also been oversubscribed because of the kind of return that we give to investors. So we are still a destination to foreign investors. We now have that two-way exchange system. Even foreign airlines can repatriate their funds. The market-driven exchange rate, market-driven price of the Naira to the dollar. And this has created transparency, and you must give kudos to the central bank for bringing that. Our Naira is now more competitive. We have moved from a competitive Naira now. That was what the CBN wanted to achieve before, and now they have achieved that, and now we are moving to a stable Naira. And that for me is what will continue to attract foreign investors into our market.
So amidst these little wins, the struggles, the trickles, and the stability, of course, with oil being the one sustaining the momentum in double digits, if oil prices suddenly crash or the world speeds up, the shift away from fossil fuels, how exposed do you think Nigeria will be?
In terms of value, Lekon will be very exposed. And again, the price has, up to this moment, the price has not met the oil benchmark that we have. You understand our budget benchmark. We are still hovering below the budget benchmark of $70 per barrel. We are doing about $66 per barrel now. So we already have a shortfall. So definitely, but again, like I said, that shortfall that we have, again, we could say they have been improved in terms of output. If there's any shock, the only beauty that we have now is the non-oil sector seems to be doing very well in terms of adding to our GDP. But how much of value did they create that will create stability in our exchange rate? And that's the major challenge, because non-agricultural products that were exported don't bring in so much value. And when I talk about value, I'm talking about Naira dollar stem inflow into the country compared to the oil sector. So that's why we need to do a lot of work on that space. And the non-oil sector is not bringing those value because of the challenges that we have with storage facility. And I think government will need to work on that infrastructure, storage, and also improve our laws that help for export seamlessly through the Nigerian Import and Export Commission. They have been doing a lot, but I still think they can do more.
So that would mean that some strategic steps are still needed to be taken to consolidate on these modest wins. All right. Thank you so much, Muktar Mohammed, CEO of Finance with Muktar, for this little time that you've shared your robust insight with us on the show. It was nice talking to you.
Thank you, Lekon. My pleasure.
Yes, sir. And that's it on today's edition of Business Edge. Don't forget that you can watch all episodes and catch up on all our shows. Of course, on our website, www.newscentral.africa, and of course, at News Central TV. That is quite focal. Now, my name is Lekon Obanjo. Enjoy the rest of your day and stay tuned for the 12th report at the top of the hour.